In a recent report, Swiss banking giant UBS has cast doubt on the long-term prospects of Bitcoin, arguing that the fundamental case for Bitcoin remains weak. The report cites a number of concerns, including Bitcoin's limited scalability, its volatile price swings, and its lack of intrinsic value. UBS is a major global financial services company with over 150 years of experience. Its recent report on Bitcoin is likely to carry significant weight among investors and policymakers. The report's main argument is that Bitcoin lacks the key characteristics of a sound investment. Unlike traditional assets such as stocks or bonds, Bitcoin does not generate cash flow or pay dividends. Its value is derived solely from speculation, which makes it highly susceptible to price bubbles and crashes. Real-world application for cryptocurrencies remain limited in our view. Many of the crypto-related innovations in the financial industry are currently being implemented using private, not public blockchain technology. And even where public blockchains are being used, rising prices of native coins and tokens may ultimately undermine the success of the business through higher operating costs and increased competition through other blockchain solutions, the report said. It further reflected on the approval of spot Bitcoin ETFs, highlighting that it will improve access to the digital currency and enable investors to store it safely. However, it also highlights Bitcoin's scalability problems. The Bitcoin network can only process a limited number of transactions per second, which can lead to long wait times and high fees. This makes it difficult for Bitcoin to be used as a medium of exchange for everyday transactions. In addition, the UBS team points to Bitcoin's environmental impact. Mining Bitcoin requires a large amount of energy, which has raised concerns about its sustainability. UBS is not the first financial institution to raise concerns about Bitcoin. A number of other financial institutions and analysts have also expressed doubts about its long-term viability. However, Bitcoin supporters argue that the report overlooks the potential of Bitcoin as a hedge against inflation and a store of value. They also point to the rapid development of the Bitcoin ecosystem, including the emergence of new scaling solutions and the growing adoption of Bitcoin by institutional investors. It is still too early to say whether Bitcoin will succeed or fail in the long run. However, this is a reminder that Bitcoin is a highly speculative asset with a number of risks. Investors should carefully consider these risks before investing in Bitcoin. UBS's report on Bitcoin is a valuable contribution to the ongoing debate about the future of cryptocurrencies. It is important to remember that Bitcoin is a complex and rapidly evolving asset. Investors should carefully consider the risks and potential rewards before investing in Bitcoin.